Assalamualaikum to Dr. Rosmila. Today, me and my group members are presenting literature review for role of budgeting. This is our group members. My name is NATASHA binti Abu Bakar. My major number is 204273. Nowadays, the usage of technology keep rising will motivate the development of the business. It will start up the company and expand the business network that requires more cost in terms of spending pattern for the business operation. Therefore, managers need more information to help them create value and manage resources well. Thus, the review's primary purposes is to explain, enhance, and educate the readers on how alternative accounts can improve their job performance. The important issue to be discussed is traditional budget usage still has been applied for running the small business because they lack knowledge about this alternative. As life keeps modern, managers who use traditional budget also notice and complain about various dysfunctional behaviors which are lead to be an incorrect reflection of the targets that they want to achieve. The estimate can be manipulated by certain managers or even business owners so that the real result appear more appealing. In the long run, in managing the business, it will affect to their performance of the business. Knowledge about the budget must be educated to all, especially manager. The English word budget derived from the French word baguette and the Latin word bulga, which was a little bird or a large-sized purse hanging on their horse saddle by traveler in medieval time. Budget is a detailed plan summarizing the financial consequence of an organization's operating activities for a specific future period in every business undertaking. Budgeting constitutes the core of the business running exercise. Beyond budgeting shows the credibility of producing a quality budget. The role of budgeting that we are more focusing are as a planning tool, control profit and operation, and evaluating performance.
Hi, Assalamualaikum. My name is ISDAWATI SULAIMAN with metric number 202305. I will presenting about the first goal of budgeting, which is budgeting is planning tool. It is noticeable world that budgeting is planning tools since it expresses a plan of action in financial terms. The budgeting process requires the entities within an organization to plan because in order to achieve an organizational goal, they should determine what it must do and how it might achieve the goal. For instance, in a company, all the managers work together to plan for company performance. The calculation of sales, expenses, or cash will be guided by doing budgeting. Using beyond budgeting give opportunity to all organization members take part in budgeting because traditional budgeting focus on top-down approach only. In addition, budgeting is a process of profit planning and control, where it describes the budgeting process in a broader context that commonly represented. Budgeting process is more than just a process in which quantitative financial plans are combined. It is a method by which the strategic goals of top management escalate to operational stage. For this, pur- for this purpose, budgets are suitable because they are essentially the precise quantification of goals for short-term action choice. Budgeting in traditional method, rigid and political exercise, management shifted to beyond budgeting as it makes profit planning and forecasting lean and unbiased process because volume of budgeting were made monthly or quarterly rather than annually. Furthermore, budgeting is a planning tool because it helps managers analyze and calculate the organization potential goals and use this to assess real outcomes. Convincing managers to take a broad view of an organization that takes into account the implication of the operation of their department and those of operation of other departments in the bigger company on the efficient and effective implementation of strategic goals is also how budgeting helps organizations. Managers need to acknowledge adjustment in operating conditions and plan initiatives that need to be adopted when using budgeting as a planning tool. Beyond budgeting will improve than traditional budgeting as it avoids cascaded goals by setting the goals directional, ambitious and relative. Last but not least, choosing the better budgeting methods is vital for organization as it helps a lot in planning decision. In this new business era, providing a business plan should be more agile and faster so as not to lag behind competitors in the same field of business. Inflexibility from using traditional budgeting may interfere with the smooth running of doing budgeting. That's all for me. Thank you.
So, Assalamualaikum and hi everyone. My name is NADHEERAH IMANI BINTI NIZAM, the metric number 203374. So, I will continue with the second rule of budgeting, which is budgeting for evaluating performance. So, what is evaluating performance? As we know that evaluation is an essential tool for a good budgeting because it can compare the actual result and budgeted result, which can help the managers to evaluate their performance of the individuals, departments, and also the entire company. So in other words, performance budgeting systematically integrates performance information into budgeting by using it to link finding to result, which is outcome or outputs, with the aim of improving the performance. So other than that, the evaluating performance also has played its role in budgeting to improve the spending prioritization. Some use it to find future expected result or strengthen the understanding of the link between past result and spending decision in order to affect future budget. Some emphasize output and where others emphasize outcome. But this rule it can be depends on the objective or the goal of each of the company. So as mentioned in the introduction, the issue in our case study is that evaluating performance in traditional approaches only provide retrospective view of the company's competitive position. So we can say that this analysis is not only static but also outdated and incomplete. And traditional financial approaches cannot determine why the overall results of the company are as they are. Thus, by implementing the modern methods, it can provide more good information as the company can evaluate and interpret of the performance effectively. So, the modern approaches have been improved to provide more good information as the company can understand the system flow in terms of information, material, and financial. And also change, which is in terms of purchase, production, sale, and the resulting trial logistic. Last but not least is expenditure plans, which can evaluate as per project performance and assess in terms of the shareholder that the company has created. So next is the implication of this budgeting for evaluating performance is that it can assess performance which motivate the employee to fabricate better correspondence channel in both association with the customer and also the supplier. Secondly, it can ensure a responsible, serious, and well-managed image. Last but not least is the critique of this budgeting for evaluating performance. The systematic use of this assessment, which is the evaluating performance for group budgeting, can provide a good information to evaluate and interpret successful performance measure and also performance indicator. Evaluation has a particular play an important role in company performance budgeting because of the particular source of good performance information. If budgeting is to become truly performance informed, it is necessary to create through the systematic use of assessment, which can help the company to give them more clearer image and knowledge, and also information on how they can evaluate their performance of the company for their future budget. So I think that's all for me. I will pass to the next presenter.
Assalamualaikum. My name is Nurfarzana binti ILHAM and my matrix number is 201874. Today, I will continue this presentation with the third budgeting rules, which is controlling profit and operation. The meaning of controlling in management process is monitoring the implementation and taking corrective action as needed. Controlling also plays a vital role in determining whether the result meet the predetermined goals, emphasize the existence of abnormalities and factors that cause them. In this event, it relates to responsibility accounting, which can be defined as accounting system which costs and revenue are analyzed following the personal responsibility so that the performance of the budget can be monitored in financial terms. In the meantime, there is another component that embraces responsibility accounting, which called standard costing. Standard costing is prepared to maximize the operational efficiency and also control the cost. For the purpose of controlling the cost, standard costing uses variance analysis, whereby it will examine the difference of standard cost and actual data, and then focusing on abnormal figure from time to time. On the other hand, there is also a type of budget that can give a realistic result, which is flexible budget. And it is also prepared for controlling purpose. A flexible budget is prepared using a budgeted cost based on actual sales of level activity. What makes flexible budget is special, management will be more prepared and by considering the unexpected event that may occur in operation that can affect the level of activity. Okay. Nevertheless, in controlling profit and operation for traditional budgeting, there are some issues that obstruct the operation to get efficiency and to control the profit. Some of the reasons are the traditional budgeting is inflexible, in which it always focuses on the fixed performance standard for the current year, yet abandons the market environment that always facing uncertainty. Besides, traditional budgeting is not prepared frequently, like usually once a year. These two factors make traditional budgeting become constraints to changes and hard to be controlled. Therefore, to cope with this problem, business can apply a continuous budget cycle approach. On the top of that, continuous budget cycle approach are prepared regularly, such as bi-weekly, monthly, and quarterly. Consequently, it supports the business towards a better agility and competence in adapting to business environment uncertainty so that the company can control the operation and profit efficiency. That's all from me. So I will pass to the next presenter. Thank you.
As for the conclusion, all the reviews that have been investigated can be summarized that the use of traditional budget in managing a business does not consider all aspects. Hence, it leads to the not favorable result compared to modern budgeting. Modern budget is more preferable and detailed as it fills all the elements from the beginning of the process until the last cycle. First, to recap, as a planning tools, as a start, modern budget as a planning tools managed to express a plan of action in financial terms. It functioning as to make sure the manager is able to analyze and calculate the organization's potential goals and use this to assess real outcomes in future. Secondly, as evaluating performance, evaluation is an essential tool for good budgeting and a core element in comparing actual result with budgeted result, which can help managers evaluate the performance of individuals, departments, divisions, or the entire company. Thirdly, as controlling profit and operation. Efficient budgeting comes out with controlling profit and operation and evaluating performance by comparing the actual result with the budgeted result. In controlling profit and operation, responsibility accounting is one of the departments responsible for deciding the cost for every business operation. Important or implication on practices. The role of budgeting are that it can help people, especially a manager of a small business, be more apparent how the use of budgeting help manage business operation. It equally gives the new manager especially the critical idea about making a better decision, properly controlling the company resources, and dealing with emergencies problem earlier to improve the company performance. That's all from our group. Thank you.